Hello, hello. It is 5:55 p.m. Wednesday, November 2nd, here for the post-market recap and review. Now, today was a big day in the markets. We had the FOMC statement and Fed interest rate decision where they, as expected, raised interest rates by 75 basis points. But that alone was not the highlight of the day. What investors cared about was the forward guidance. Was um, was Jerome Powell going to come with a softer approach? Was he going to slow down on his pace of rate hikes coming forward? Was he going to maintain his hawkish approach and his resolve to keep inflation down? Well, the markets were hoping for a slowdown, which fueled the pullback on stock markets, which fueled the pullback on gold, and fueled the pullback on all these risk assets where investors were hoping for that slowdown. But Jerome Powell came in with all the hawkish talking points that that inflation is still way too high. Inflation must be brought down to their goal of 2%. Okay. Also, they said the labor market is still very strong. The economy is still robust. There's still more work to be done on rate hikes. They need to keep them raised for an extended period of time. They're looking at a terminal rate of about 5%, which is still 100 basis points up from where we are right now. And very important point here, where he talked about in the press conference, was that the risk of over tightening, right? So this was one of the things that fueled the slowdown hopes, was that the Fed may over tighten, meaning they may raise rates to a certain point, to a level that is too high for the economy to handle, right? So this led investors to believe that they need to slow down in order to keep the economy in check and to prevent a disastrous recession, as so the narrative went. But in the press conference, he said plainly that the risks of over tightening are not as bad as the risk of under tightening. If you over tighten and we get into a recession, the Fed could always slip back into more accommodative policy and basically inject the markets with their infinite amount of money that they could print. So the risk is not in over tightening, the risk is in under tightening, meaning they are worried about not raising rates enough so that the inflation will become entrenched. In other words, they don't want to be too cautious and raise rates too little so that the inflation gets out of control. This is what I've been talking about in the pre-market and in previous days, talking about inflation is hyperinflation is a bigger risk, is a bigger disaster than the short-term recession that we may get in the next 12 to 24 months. So that was a huge indication here that led to stock markets across the board completely reversing. Look at the chart here. Ended up having a big pump to the upside with this delusional optimism, and then the dump. So clear as day, pump and dump on the stock markets. Insane price action. So let's move on to the equity markets here. So we held this Sellside liquidity zone that we've been looking at 3,900 on the S&P 500. From this double top, we started seeing some signs of softening. And during the session here, we came back up to grab more liquidity and started to reject again this daily breakout structure, flipping and having this massive bearish candle. So it's clear as day that the hawkish Federal Reserve sentiment is back in play. – Equities dropped massively. We look at all three equity markets in the US dropped 1.5, 2.5, 3.5%. The UK is down. DAX is down. All the stock markets globally are down. The risk sentiment is very fearful now, based on the aggressive Fed. Not giving a shit about recession fears, basically. Now, the dollar, as outlined in the pre-session video here, we were holding this daily breaker structure, this bullish liquidity zone, this last level of bullish liquidity that led into these highs, came to retest that again, and we even had the liquidity grab, retest this level, and then close back above this sell side liquidity level that we're looking at. So even more confirms that now I'm expecting this dollar sentiment to continue, dollar domination to come back, and starting to see way more continuations of this move as the pivot prayers, basically the slowdown prayers that led to this slowdown into dollar, is now getting completely reversed and the bulls are back. So having said that, gold had a similar liquidity grab back into previous sell-side liquidity zones to the left here, and totally reversed as the sentiment shifted during the press conference. Now there's multiple opportunities to take some sells here. First of all, let me bring back my my red box here. This was the sell-side liquidity zone that I was playing. I actually got some sells in the New York session. As also, I didn't even look at it here, but the ADP came out, 239,000 jobs added in the ADP non-farm employment change. That's much higher than what they were expecting and much higher than previous. So this added to the hawkish Fed sentiment, as a strong labor market means that it's a green light for the Fed to keep raising rates higher and higher, right? So this added to the sentiment, which gave me confirmation as during the New York session, the ADP came out at 8:15, right around here. We had an initial spike down, but then we came back to retest these previous highs around 1658, and this is where I took my sells based on, obviously, I've mentioned this time and time again, based on the overall sentiment, expecting the Fed to anticipating a hawkish Fed to hush these pivot prayers and bring reality back to the markets. We had the dollar holding bullish structure. We had equity softer, rejecting sell-side liquidity zones ahead of the FOMC. Gold, we've been playing this for this higher time frame bearish structure, and we're retesting this 4-hour sell-side liquidity zone, right? So the structure on the 4-hour, from these highs and the rejection, we started to get exhaustion from buyers, lower highs, lower lows, and this lower high around 1665 that pushed into these lows was getting retested. We had initial reactions yesterday, and then we were playing this double top right at the sell-side liquidity zone, right? So we had, on top of that, we had the ADP come out positive, adding to the sentiment, which gave me confidence to take some sells here. And after ranging within this zone, we finally broke to the downside and had a nice run, basically to retest on the 1 hour here. On the 1 hour, we had this structure level to the left, and we actually came to retest that zone on the dot here. So we had a nice 110 pip run to the downside here prior to the madness of the FOMC. Now, this was a sell opportunity to take during the New York session, but after the Fed sentiment came in, there was multiple opportunities to get in. Once we had this price setup, this delusional optimism come in, we came and grabbed some liquidity, probably hunt a whole bunch of stop losses, and then boom, big seller candle. And then we came to retest this order block to the left, beautiful double top, very nice opportunity to get into these sells with a tight stop loss. Even having a 20 pip stop here, all the way back down to the lows is another 150 pips. and playing the sentiment, could hold that and still be in this trade right now, running at around 270 pips in profit as we speak. Personally, I took my profits around 230 pips, and I was very, very happy with this trade. And I'm going to be continuing to look at taking further trades here, playing the sentiment, as I anticipate the dollar strength to be continuing. Now, looking at structure here, just looking to take part in these sells here, I'll be looking for any retests, clear retests of this 4-hour break of structure. So we got a brand new sell side liquidity zone, this 4-hour structure. Got a brand new structure here. And zooming into the 15-minute, we got a little bit of a minor zone here. These candle bodies right here, a minor zone that we could come and retest as well. So looking at sells, if we can come back to retest this zone around 1640 for sells, or even that deeper retest 1642. Also looking for some clean sells here. Or if we start creating some new structure, I'm just looking for any excuse to hop into these sells right now. But also keeping in mind that we are approaching this structure level to the left here around 1632 to the 1630 region. So so we're looking at pullback sells, or if we break below 1630, looking for continuation sells to retest these lows around 1620 to 1615. So that's basically it. Right now, dollar domination is back in the cards, looking to take part as the volume is returning in the markets, as this FOMC statement was extremely hawkish, so looking to take part in some gold sells, stock market sells, and US dollar buys.